So we're impact investors, and the thing to consider with impact is that we take the most holistic possible view of a company. So we build on some of the principles of ESG, but we also try and identify what a company really does. So as we analyze a business, we do a full financial due diligence, but we also do an impact assessment to really try and map out how that business is contributing to one or more of the sustainable development goals. And so the reason that's critical is that we're seeing unprecedented volatility throughout the market, and so in order for us to we've been able to negotiate it really very soundly because we've been able to take a very long-term holistic view with our investments.
One of the challenges, it seems, with this market is that it's been indiscriminate gains. And when I look at the performance even of the Russell 2000, we're up more than 50% from the trough here. That suggests that it doesn't matter whether you've got a strong balance sheet, a weak balance sheet, you have good ESG credentials, you don't have good... Everything seems to have gone up in this fear of missing out rally. Why are you able then to perhaps demonstrate or how can you demonstrate superior outperformance and better credentials in a market where everything is rising?
Well, it's very hard to, and to be fair, the last couple of weeks it's been much more difficult. Look, it's a question of it's a temporal question, isn't it? And frankly, we're very long-term investors. We really take a view 3 to 5 years out, and the types of themes that we're attaching ourselves to are the longer-term secular themes. We're a bit less interested whether or not there's going to be a value rally or has been a value rally over the last couple of years. That's not going to incite us to trade and change our views based on the very solid and holistic view of the way in which we try and look at businesses. I mean, the main philosophy that we have is that we need to move past the idea of shareholder primacy. And I think that everything that's been happening so far this year, maybe beginning off with August last year, and when the Business Roundtable announced that they feel that businesses require and have a duty of care to beyond just to their shareholders. And I think with what's been happening throughout 2020, and let's not forget, it started off with bushfires. We've had the Me Too movement. We've got Black Lives Matter. There's so much more that the companies have to consider, and these are the sorts of things that we try and adopt and think about when we're thinking about the longer-term investment theses and how a business has its responsibilities beyond to just short-term quarterly earnings, because that's not really what builds 3 to 5 years performance, which is really what our clients demand.